Mukesh Ambani-backed Reliance Industries has acquired majority shares of luxury hotel Mandarin Oriental New York for $98.5 million. The deal has been done through Reliance Industrial Investments and Holdings Ltd., a wholly owned subsidiary of Reliance Industries led. RILE has entered into an agreement to acquire the entire issued share capital of Columbus Center Corporation, a company incorporated in the Cayman Islands, and the indirect owner of a 73.37% stake in Mandarin Oriental New York, one of the premium luxury hotels in New York City, for an equity consideration of approximately $98.15 million. Set up in 2003, Mandarin Oriental New York is an iconic luxury hotel located at 80 Columbus Circle, directly adjacent to the pristine Central Park and Columbus Circle. It has global recognition and has won several influential awards, including AAA 5-Diamond Hotel, Forbes 5-Star Hotel, and Forbes 5-Star Spa, among others. It had revenues of $115 million in 2018, $113 million in 2019, and $15 million in 2020. This acquisition will add to the consumer and hospitality footprint of the group. RIL already has investments in EIH Ltd, Stoke Park Limited in UK, and is developing state-of-the-art convention centre, hotel, and managed residences in BKC, Mumbai. The closing of the transaction is anticipated to occur by the end of March 2022 and is subject to certain customary regulatory and other approvals and the satisfaction of certain other conditions, the company said in a statement. In the event that the other owners of the hotel elect to participate in the sale transaction, RILE would acquire the remaining 26.63%, based on the same valuation used for the acquisition of the indirect 73.37% stake. Electric vehicle manufacturer Ola Electric has said it is producing about 1,000 scooters a day. Taking to Twitter on Thursday, Ola Chief Executive Officer Bhavish Aggarwal said the company will open a purchase window for remaining customers. Future factory now producing almost 1,000 scooters a day. Opening up purchase window for remaining customers soon, said Aggarwal. Recently, the Ola CEO claimed that all vehicles that were due for delivery in December 2021 have been dispatched. The company has set up its manufacturing unit, Ola Future Factory, in Hosur, Tamil Nadu. It is a 500-acre setup for the production of Ola's two-wheeler EVs and is said to have the capacity to produce 1 crore electric scooters per year. Read more. Ola Electric says dispatched e-scooters to all buyers. In December 2021, Ola Electric has raised 398 Indian rupees crore from Temasek along with the participation of Edelweiss, IFL, VSS Investco, and Bollywood actors such as Zoya Akhtar, Farhan Akhtar and film producer Ritesh Sidhwani among others, according to the company's regulatory filing. In September, Ola Electric raised over $200 million from Falcon Edge, SoftBank and others investors, at a valuation of $3 billion. Ola Electric has recently announced that its EV charging station, Ola Hyperchargers, will be free for use till June 2022 for all customers. Hypercharger rollout is said to have started across cities and the company will set up over 4,000 charging points though next year. The charging points are expected to become operational in 6 to 8 weeks. Amid rising Omicron concerns, a new COVID-19 strain named Deltacron has been found in Cyprus. This strain is a combination of Delta and Omicron, the COVID-19 variant. Leontios Kastrakis, professor of biological sciences at the University of Cyprus, has talked about Deltacron in an interview with Sigma TV. The new Deltacron strain was found in the combination of Omicron and Delta variants of COVID-19, and the discovery was named Delta due to the Omicron-like genetic signatures within the Delta genomes, Kastrakis said in the interview. Kastrakis and his team have identified 25 such cases. Leontios Kastrakis said, "We will see in the future if this strain is more pathological or more contagious or if it will prevail over Delta and Omicron." Kastrakis' personal view was this strain will also be displaced by the highly contagious Omicron variant. 25 cases have been reported so far, according to Bloomberg. Tom Peacock, virologist, has tweeted that the Cypriot Deltacron sequences reported by several large media outlets look to be quite clearly contamination, they do not cluster on a phylogenetic tree and have a whole Arctic primer sequencing amplicon of Omicron in an otherwise Delta backbone. Eric Topol, physician-scientist, has tweeted that Deltacron is a scariant. One less thing to worry about. The World Health Organization has not made any official announcement on the Deltacron variant. Earlier, other than Omicron, HU variant was also identified. Israel also reported flurona, which is a combination of COVID-19 and flu. India reported 141,986 COVID cases on Saturday with 285 deaths in the last 24 hours, till 8 a.m., as per Health Ministry data. The cases have increased by 21.25% over the previous day's infections of 117,100. The country's active caseload was at 472,169, constituting 1.34% of the country's total positive cases. The weekly positivity rate in the country stood at 5.66% and the daily positivity rate expanded to 9.28%. The Omicron tally in the country stood at 3,071 with Maharashtra at 876, followed by Delhi at 513, Karnataka at 333 and Rajasthan at 291, according to the Health Ministry. The country conducted 15.29 lakh tests during the previous day, aggregating to 68.84 crore tests done so far. Delhi reported 20,181 COVID cases on Saturday with 7 deaths. The cases are higher than the previous day's infections of 17,335. Positivity rate in the capital increased to 19.6%. Meanwhile, in Bengaluru, the test positivity rate crossed 10% with the city recording 7,113 cases on Saturday. Bengaluru continues to be the epicenter of COVID in Karnataka with 79% of the cases, Karnataka Health Minister Dr. Sudhakar K said. Delhi Health Minister, Satyendra Jain, said that at present only 10% of the hospital beds are occupied in the city. There were 17,335 COVID cases in Delhi on Friday. Also, Health Minister Mansukh Manadavai said, over 2 crore youngsters in the 15 to 18 age group have received the first dose of the COVID vaccine in less than a week of the vaccination drive. Maharashtra reported 41,434 new COVID-19 cases on Saturday, taking the total number of active cases to 173,238. Mumbai reported 20,318 new cases. Even on Friday, the city had reported over 20,000 cases. While 9,671 patients were discharged on Saturday, Maharashtra reported 13 COVID-19 related deaths. The case fatality rate in the state is 2.05%. Currently 845,089 people are in home quarantine and 1,851 people are in institutional quarantine. On Saturday, 133 patients with Omicron infection are reported in the state. Of these, 130 have been reported by the Indian Institutes of Science Education and Research and 3 have been reported from Gujarat. Till date, a total of 1,009 patients infected with Omicron variant have been reported in the state. Out of these, 439 cases have been discharged following a negative RT-PCR test. Mumbai City has 106,037 active COVID-19 patients. On Saturday, Mumbai Circle, including Mumbai City, reported 33,134 new COVID-19 patients. Pune Circle, including Pune City, reported 4,749 patients, which included 2,804 patients in Pune. West Bengal registered 18,802 new COVID-19 cases on January 8 and the positivity rate stood at 29.6%. The total COVID-19 cases was at 17,3759 as on Saturday. The state government announced certain relaxations in restrictions on Saturday. It allowed salons and parlors to operate with 50% seating capacity up to 10 p.m. According to the State Health Bulletin, the percentage of occupancy in COVID beds stood at 4.93%. The discharge rate was 95.27% and fatality rate was 1.15%. Kolkata accounted for 7,337 cases out of 18,802 COVID cases. North 24 Parganas registered 3,286 cases, while Howrah recorded 1,483 new cases on January 8. It is to be noted that the Calcutta High Court had, on Friday, allowed the Gangasagar Mela, which begins on January 8, strictly following the COVID-19 restriction. It has also ordered setting up of a committee which may recommend to the state a ban on entry to Sagar Island if there is any violation of health safety norm. The High Court has further directed the forming of a 3-member committee to oversee restrictions imposed by the state government are adhered to, since apprehensions have been expressed by the West Bengal Doctors Forum that measures suggested by it in an affidavit are merely paper suggestions and will not be implemented in practice. The Mela attracts a large number of pilgrims who arrive at the island at the confluence of the Ganga and the Bay of Bengal to take a holy dip. The footfalls reach close to 18 lakh. Markets in 2021 were in no mood for a breather. After defying skeptics with a 15% gain in CY 2020, the benchmark Nifty 50 followed it up with a 24% gain in CY 2021. The broader Nifty 500 too returned a good 30% for the year. With its 2021 performance, the Nifty 50 has managed positive returns for 6 consecutive years and in 9 of the last 10 years, enough to make those who entered the markets over the last decade believe stocks never go down, and those who endured bear markets prior to the last decade think it was more of a blip. However, rather than see this as the new normal, one must guard against the trap of hot hand fallacy. While there is no Paul the Octopus when it comes to market predictions, as we attempt crystal ball gazing into 2022, there are ample reasons to be cautious. Starting with valuations, the Nifty 50 is trading at a FY22 PE of around 24 times and FY23 PE of 20 times. On a trailing basis, it is trading at a PE of 25 times, which is a 16% premium to its 10-year average and in line with its 5-year average. While it may look like it's not trading at a significant premium to historical levels, digging deeper into the contributors to earnings indicates some amount of overvaluation. Much of the contribution to earnings is coming from highly cyclical companies like metals, which have seen substantial growth in earnings benefiting from the commodities boom. For commodity companies with cumulative Nifty weights of around 4% are expected to contribute around 18% to the cumulative net profits of Nifty 50 companies in FY22. Out of the absolute increase in net profits of Nifty 50 companies in FY22, these companies are contributing to around 45% of the increase. Commodity and metal company earnings tend to be highly volatile, and this can impact earnings either way. Financials is a heavyweight in the index and is expected to contribute around 25% to cumulative net profits in FY22 and drive earnings growth in FY23. Lower credit offtakes and spike in bad assets can play spoilsport. This apart, investors also need to factor risks of multiple compression in 2022. Broadly, the PE has been expanding over the years. Out of the absolute returns of 275% in the index in the last decade, around 170% is from multiple expansion, with earnings growth contributing less to the return. Multiples can contract due to various factors. For example, Warren Buffett refers to interest rates as gravity for financial valuation. Higher the interest rates, higher the force of gravity on valuation. With interest rates expected to rise globally, including in India, the force of gravity may start getting stronger and cause multiple compression. Another factor to keep in mind is the sustainability of earnings trajectory, given potential headwinds for economic growth. Analysts expect earnings growth of around 18% in CY22. While earnings growth driven by a recovering economy can sustain, it would be prudent to bake in some caution. At the same time last year, the US Fed was not even thinking about tapering, and right now they have not just started to taper, but decided to accelerate it and indicated multiple interest rate hikes for the year. Monetary tightening is also on the cards in India this year. The looming slowdown in China post-unwinding of the real estate boom there, and ripple effects on global growth are other aspects to be considered. The impact of these on GDP growth and earnings growth of corporates needs to be monitored. For example, after a near 40% growth in CY10 earnings post the global fiscal and monetary stimulus in the aftermath of the financial crisis during 2008 to 2009, the earnings growth for Nifty 50 tapered to single-digit percentage growth for the next few years. Growth slowing down can also result in multiple compression. Also read, fixed income outlook for 2022. Into 2022, investors are faced with two choices: missing out on further gains in the market if the momentum continues, or losing out on the gains made over the last year or few in case the bears get to have their time in the market. If your choice is the path of caution, then here are some of the steps you can take in early 2022. 1. Book profits in some of the new age and other companies where the valuations are completely disconnected from fundamental. While this is a judgmental call, comparison with international peers for new age companies, and with historical valuation levels for other companies that have been trading for many years is one way. Holding on to companies trading at excessively high multiples may not be worth the risk in the current context. 2. In maintaining your equity portfolio and reinvesting from exits in overvalued companies, focus on companies with strong balance sheets, preferably generating positive free cash flows, those that can maintain their margins in an inflationary environment, and are trading at discount/in line or at best modest premium to their historical valuation. You may not get companies that check all the boxes. For example, Indian IT services companies may check the first 3 boxes, but are trading significantly above historical valuations, negating the first 3 positive. The margin of safety is more when valuation is reasonable and some of the other boxes are ticked. For instance, telecom has pricing power today, and a player with manageable debt would be a better fit in a portfolio. There may be some opportunities in undervalued PSU. Another segment would be holding company. Some trade at significant 50 to 60% discount to underlying asset value, and may offer opportunities for long-term investors. Investors can also look for entry points in sectors where there is a long runway of growth given low penetration levels, like in insurance, electric vehicles, defense, etc. Given the broad market outperformance in 2021, investing in 2022 should be entirely bottom-up. 3. Although U.S. markets too are prone to correction, some diversification into quality and reasonably valued companies listed there is also a good option. For example, the new age peers of Indian companies in the U.S. markets trade at a significant discount compared to their Indian counterparts, although they too have strong growth prospects and fare better on profitability metrics. 4. Reducing some equity exposure in overall asset allocation and parking in debt options is worth considering. These could serve as useful ammunition whenever a market correction materializes. Whether this year or not, eventually, corrections happen in markets, and they end up being as severe as we have seen in 2000 to 2001, 2008 to 2009, 2010 to 11, 2015 to 16, and in 2020. If the powder is not dry to reinvest in markets and corrections come, valuable opportunities will be lost. Also read, Gold Outlook for 2022. Orobindo Pharma Ltd's brand of Molnupiravir, Molnaflo, is now available in the domestic market across all major metros and towns. The Hyderabad-based company has priced Molnaflo at 49.97 Indian rupees per capsule. The price of Molnupiravir of Dr. Reddy's Laboratories Ltd is 35 Indian rupees per capsule, while Hetero and Optimus Pharma is at about 63 Indian rupees per capsule. Molnupiravir is for treatment of adult patients with COVID-19, with SP0293PC, and who have high risk of progression of the disease including hospitalization or death. Orobindo's brand Molnaflo registered is now available pan-India across all major metros and towns through distribution partner. We are delighted with the timely permission from DCGI for the licensed version of Molnupiravir as it opens up access to an affordable treatment option for COVID-19 patients and enable us to help battle the pandemic with effective and high-quality pharmaceutical product. We committed to enhance access to this product for patients in need, in our partnered territories, K. Nithyananda Reddy, Vice Chairman Managing Director, Orobindo, said on Thursday. Molnupiravir was earlier approved under emergency use authorization from CDSCO, India. This is the first oral antiviral approved by India, the UK agency, and also by US Foods Drugs Administration. Last week, Japan's Ministry of Health, Labor and Welfare granted special approval for emergency in Japan for Molnupiravir for infectious disease caused by SARS-CoV-2. Earlier last year, Orobindo had signed a bilateral non-exclusive voluntary licensing agreement with Merck Sharp Dome, Singapore, a subsidiary of Merck Company, to manufacture and supply Molnupiravir to over 100 low- and middle-income countries, including India. For the licensed version of Molnupiravir, Orobindo enjoys backward integration with in-house API manufacturing, which equips it with stronger control on the quality systems and supply chain. The Finance Ministry has exempted foreign portfolio investor from providing information about new clients within 10 days of their joining. Experts feel such a move will provide a much-needed breather to FPI. FPI can be an individual or institution from any other country who must register here to invest in the capital market here either as an intermediary or on its own. The central government, in consultation with the regulatory authority, namely the Securities and Exchange Board of India, in the public interest and in the interest of the regulated entity, namely the foreign portfolio investor, hereby directs that the provisions of sub-rule of Rule 9 of the Prevention of Money Laundering Rules, 2005 shall not apply to the foreign portfolio investor, a notification by the ministry said. Rule 9 of Prevention of Money Laundering Rules, 2005 is related to client due diligence. There are two situations in sub-rule under the first situation. Every reporting entity will identify its clients at the time of commencement of an account-based relationship, verify their identity, and obtain information on the purpose and intended nature of the business relationship. Also, it will determine whether a client is acting on behalf of a beneficial owner, identify the beneficial owner, and take all steps to verify the beneficial owner's identity. The second situation is related to transactions and other activities. Here, the reporting entity must verify identity while carrying out transactions of an amount equal to or exceeding 50,000 Indian rupees or any international money transfer operation. Now Sub-Rule 1 says every reporting entity will within 10 days after the commencement of an account-based relationship with a client, file the electronic copy of the client's KYC records with the Central KYC Records Registry. FPI has been exempted from this. According to Sunil Gidwani, partner with Nangia Anderson LLP, in 2018, SEBI had amended the KYC requirement for foreign portfolio investors, requiring them to identify the beneficial owner who ultimately owns or controls an FPI. The BO should be identified as per Rule 9 of the Prevention of Money Laundering Rules, 2005. The materiality threshold for identification of BOs shall be the same as prescribed in PMLA rules, i.e., 25% in the case of companies and 15% in the case of partnership firm, trust unincorporated association of person. While necessary information is obtained by the custodians at the time of registration, in case of any new investor investing into the FP entity subsequently in the case of multiple tier structures it's not easy to determine ultimate owner meeting threshold requirement. The time period of 10 days was too tight to do the necessary due diligence and obtain relevant information from any new investor joining the FPI. The exemption from this 10-day period for FPIs will provide a much-needed breather. One hopes that if any time period is notified separately, it is a reasonable one, he said. India revised the home quarantine rules for international arrivals as the country's COVID-19 count surged to more than 1.17 lakh infections on Friday. All major metros reported a rapid surge with high positivity rate, with Delhi, Mumbai, and West Bengal leading the charts and worries mounting over doctors and health workers contracting the fast-spreading virus strain. The weekly positivity rate in the country stood at 4.54% and the daily positivity rate stood at 7.74%. The country's active caseload was at 363, constituting 1.05% of the country's total positive cases. In the national capital, the COVID cases surged to 17,335 with 9 deaths on Friday. In Maharashtra, too, the cases remained high, at 20,971 cases with 6 deaths. The Omicron tally in the country stood at 3,007, with Maharashtra reporting the maximum number of 876 cases, followed by Delhi and Karnataka. The weekend curfews and the scare of restrictions spooked the hospitality and travel industry, while governments rushed to contain superspreader events. After the cancellation of the vibrant Gujarat summit, Rajasthan nixed its investment summit scheduled for January 24 to 25. Although the hospitalization rate is largely low, at around 3 to 7%, compared to the Delta wave's 20%, the high transmissibility of the virus, especially among healthcare workers and doctors, is causing concern. The Indian Medical Association estimates that about 10% of healthcare workers across the country are positive. After 220 resident doctors tested positive in Mumbai, around 200 doctors across Delhi are believed to have contracted the virus, said sources. The Health Ministry issued new guidelines for all international arrivals, including a 7-day quarantine even if they have tested negative. Passengers will have to test again on the 8th day of their arrival, and if still negative, self-monitor for another 7 days. The new rules come into effect from January 11. Andhra Pradesh reported 840 new cases out of the 37,849 samples tested in the last 24 hours. No new Omicron cases were detected. Tamil Nadu reported 8,981 new cases on Friday, with Chennai contributing to half of it with 4,531 infections. After 984 patients were discharged, the number of active cases stood at 30,817. 8 deaths were registered and 136,620 samples tested. Maharashtra refrained from imposing stricter travel and movement restrictions even as the cases mounted. Health Minister Rajesh Tope said there has been no rise in hospitalization and use of oxygen. Tope said schools in Mumbai were closed because parents panicked. Mumbai Mayor Kishori Pednekar said there would be no lockdown. Karnataka reported over 8,000 cases, with the positivity rate at 4.15%. The government announced new COVID guidelines allowing engineering colleges in Bengaluru urban to hold offline classes and advocate/law offices to function with 50% capacity. The state recorded 15,421 new cases on Thursday and a positivity ratio of 24.71%. However, the Calcutta High Court allowed the Gangasagar Mela, which begins on January 8, strictly following the COVID-19 restriction.